Hopes of easing tariff tensions lift stocks amid steady domestic inflows into mutual funds. IT and auto notch gains while realty and FMCG trade soft.
The stock of Grow owner Billion Brains Garage Ventures scales to 120 rupees post listing, a 20% premium to its offer price of 100 rupees in a promising debut. BSE's strong second quarter show also helps fire all the other capital market stocks.
Tata Motor relists at a hefty premium to its implied price after the demerger of the passenger vehicle business. The Tata Motors now houses the only commercial vehicle business of Tata Group.
Sir Dorabji Tata Trust inducts Noel Tata's son Neville Tata on the board along with group veteran Bhaskar Bhatt. Noel Tata will be the only permanent trustee while Vice Chair Venu Srinivasan shall have a 3-year term in keeping with revised regulations.
Hello and welcome. You're watching us here on Halftime Report. A very good afternoon so far. If you're a bull, we come to you live from the CNBC-TV18 Motilal Oswal studio. The markets at the highs of today's trading session. Near 200 points for the Nifty, the mid-caps following suit, the Bank Nifty, the Nifty IT, Reliance. Be that as it may, it's a very good session. And we have the India VIX, which is lower as well. So all things green.
Hi guys, yes, absolutely. Well, the market is doing well in today's trading session. We have the Nifty, which is at 25,890 at this point in time, and the mid-cap index, which is gaining which is higher by around 0.7%. Advanced decline ratio is also in positive terrain, so we have around 2,600 odd stocks advancing to around 1,500 stocks declining. So good going currently for the markets in terms of the advanced decline ratio. So seems as though it's firing on all cylinders. Let's see whether that sustains through the trading session. But it seems as though it will turn out to possibly be a day in the green for us.
Absolutely, a day in the green for us is what we're hoping for to sustain through the day as well. And all the sectors today, most of them are trading in the green except for Nifty Realty. Just a mild bit of a cut there, so not much of a concern there. All of them managing to hold on to very, very strong gains. Look at Nifty IT, 2% uptick. Nifty Auto managing to hold on to very strong gains as well. So, no complaining on that front across sectors except Realty, which is down 0.05% as of now. So, yes, good performance in terms of the broader end of the market. Nifty Bank managing to hold on to gains as well. And a lot of movers that we're seeing in terms of earnings. Look at Kirloskar Oil managing to hold on to very, very strong gains in the trading session as well. Aavas Financiers, BSE, all these surely are managing to hold on to very, very good gains and among the top gainers in the Nifty 500 as well. So that was what we'll keep an eye out on. The one that is not doing well is Thermax after its numbers. Weak set of numbers there. PI Industries, Torrent Power, all these are falling after they missed in terms of the estimates coming in for their earnings. So yes, that's what we're focusing on in terms of the markets today. That is what we'll be keeping an eye out on as well. Okay, on that note, we're actually going to sip into a very short break. We have a whole host of conversations lined up for you all through the show. Stay tuned in for that. Welcome back to Halftime Report on CNBC-TV18. Now let's put the spotlight on Emami. That's the first management on the show that we have for you all today. They reported a weak set of numbers in Q2 FY26. Revenues down by 10.3%, impacted by heavy monsoon, GST transition, all that playing out in Q2 FY26. To talk to us more about the outlook, we have NH Bhansali, CEO Finance, Strategy and Business Development and CFO at Emami, to talk to us about the outlook going forward. Thank you so much, Mr. Bhansali. I want to just start by talking about in terms of overall the volumes that one could expect going on from here. This time, obviously, we had seen that impact coming in of monsoons on your portfolio, summer portfolio specifically. So now going forward, what is the outlook in terms of volumes? What is the outlook in terms of revenue growth as well? Given that Q2, you've managed to see there's a decline in terms of revenue growth. So where do we see that headed?
Yeah, you rightly said. The Q2 witnessed so many challenges, right? The GST disruption, though it is a good step and is expected to boost the consumption and would definitely help the Emami as well. And the summer had been very bad, and so it has impacted. And on the top of it, the winter products uploading, which generally happens in the September end, was also got disrupted because of the GST, because 88% of our turnover is impacted because of this GST rate reduction. And that's good going forward. But that in the interim, the people used to correct their inventories, and the high cost inventories they wanted to knock out first. And so this has impacted. But going forward, and from October and currently also we are witnessing a good spurt, and we expect near double-digit kind of a growth to come in going forward. Second half we expect a good growth on the top of a good winter and also the favorable conditions which we are witnessing. We expect a good growth.
Right, favorable conditions. You are expecting good growth. Winter accounts for nearly 60% of your overall portfolio, and post El Nino, La Nina will come in and there will be a strong winter. So hopefully things will look good. So on a full year basis, what is the kind of revenue that you can report? I ask you because the first half your revenues are down by about 5%. Will you end the year positive, maybe mid-single digit or low single digit?
We expect it to be positive, and maybe it could be. It may go up to the mid single digit. But having what has gone past, I think the second half we expect a double-digit growth.
Okay, and what about your margins? Because the second quarter they were impacted. Obviously, you maintain your margins between 26 to 28% for the full year. Where does that number stand at?
Yeah, what has happened is mainly because the gross margins had been intact. In fact, there has been still a good the margin expansion at the gross level. But Q2 had been a dent because, and so advertisement and other expenses and the other fixed expenses. And so there had been a decline on the EBITDA margin by almost 500 plus basis points.
Okay.
We expect the same kind of a margin quarter year on year as was there in the second half, as it was this year.
Okay. Well, Mr. Bhansali, just wanted to ask you about your e-commerce segment. How much did that contribute this quarter? How much did it grow? And you do have, certain products such as Smart and Handsome, which was launched on one e-commerce platform as well. What kind of traction are you seeing within that category?
Yeah, so overall, this new age channels, modern trade, e-commerce, and also the institution sales, all have they contribute almost in the last quarter has contributed almost 30% of our turnover, and Fair and this Smart and Handsome with its relaunch, and also the Cash King, which has also been relaunched now. We are expecting they also to turn around and contribute into the growth story of our company.
So when you say turnaround, Mr. Bhansali, can you just narrow down in terms of numbers for us? Say, for example, in your key categories or your key brands, what is the growth anticipated in the second half of FY26, and how much can you possibly scale up in FY27?
So as I said, on the rather than the brand wise, on an overall basis, it would be for the second half at 10% or a double-digit kind of a growth can be expected, and this will be done by the winter and also the ensuing summer. So second half comprises of both the seasons, and that would going forward also we expect this to continue because the base has been corrected in the current first half itself.
All right, Mr. Bhansali, thank you so much for joining in. Short but effective conversation. We'll obviously continue this conversation at a later date in the middle of winter when you have better sense on how the winter portfolio of the company has done. But we'll take a short break. On the other side, we have another management from the consumer space. Bajaj Consumer Care joins in to discuss their extremely strong operational performance coming in from the quarter that went by. Welcome back. After many quarters of weakness, one of the better performers this year in the consumer space has been Bajaj Consumer. The management joins us on the show. A strong set of second quarter numbers boosted further by Vishal Personal Care's acquisition, cross margins expanding. Naveen Pandey, the managing director of the company who took over in July 2025 itself, joins in for his first ever conversation post taking over at Bajaj Consumer. Remember, before this, he was at Unibic, and for that, for 5 years at Marico as well. Naveen, thank you so much for joining in and taking some questions. It was a good performance that came in, and this despite, the transition issues that we saw around GST, etc. Now that it's been a little around 2 quarters of you joining the company, the first obvious question is what was, given to you as your key targets, and what is your strategy to achieve those targets?
So, Nandam, I think we've been a strong company historically, but we've gone through a longish bout of underperformance and weakness. And the key task which I have is to really kind of, take this forward back to the glory days. And what that means is to get back into strong double-digit growths consistently quarter after quarter, and to get to, respectable industry standard of EBITDA margins, where again, we had slipped back significantly. And that's what we're going to focus on and, try and deliver. So from that lens, while the quarter which we have just concluded was a good quarter from a trend perspective, but we're still short of where we want to be, and our endeavor would be to consistently work towards that.
Could you give us some more quantifiable details? Double-digit revenue growth, you're speaking about historical levels of margins, respectable level of margins. Could you give us a sense? And also, to get this growth, your underlying category is not which is flying off the shelves, right? The category itself is stagnant. So are you looking at other categories? Are you looking at acquisitions? If you could detail your strategy a little more.
Sure. So first of all, quantifying what it means is, so what I mean is that over the next 4 to 5 year period, we would attempt to get into a double-digit kind of growth CAGR. And when I'm saying margins, basically, if you look at our CPG industry, we work in operating margins or EBITDA margins, which are in the 20s, low to mid 20s, and that's the zone where people operate. And when I started the journey, we were in the teens and low teens, low to mid teens. So I think there's a journey on both margin and there is a journey on growth, which we are attempting. That's more from a quantification of where we aspire to be. Now, how we are going to get there is not very complex. It is 3 or 4 key bets for us. The first and the most important is our key brand, the name on the door, Almond Drop Hair Oil. We need to invest, reinvigorate that brand into growth. We have a give or take 8% market share in the overall category, and there is a lot of headroom available. It is the most premium oil for over 2 decades, and I guess in the interim, we had not done as much investment behind the brand as we need. We have started doing that, and we are seeing very good early results, and I believe that itself will be a first leg of our transformation. The second leg would be identifying new pillars of growth in terms of the new categories which can become salient for us in the time to come. They would include things like coconut, which we've already done. They would include our acquisition of Banjaras and a few more, products and categories which will come in to add that. And third pillar would be around margin expansion, creating a sustainable, healthy operating margin, which we deliver quarter on quarter. And, then the right foundation around people, processes, capabilities which are required to deliver the 1, 2, and 3. So I guess that's a simple playbook which, I'll be working on.
Sure. Naveen, you said 20% margins in the next 4 to 5 years, but you're already at 18% Q2. But FY26, FY27, where do we see that headed? At least 18% is what you could maintain maybe in FY26.
See, we don't give guidances as a principle, so I would avoid calling out the next quarter or the balance of the year. But yes, our movement from around 14 to where we are today has been rapid, and that is because some of the lower lying fruits are easy to achieve. And going forward, it's going to be a slower build in terms of another 300 to 400 basis points, which we would attempt to achieve, and that will happen slowly, gradually over a period of several quarters. It won't happen very, very quickly, in a very short term.
But that investment also you said, right? You are increasing in terms of ADHO. So then do we have to factor that in as well in terms of margins?
No, I think we will deliver the margins after those investments. Investments is also a question of how we are choosing to spend money. We've always been a high A2S organization. However, not every advertising spend really gives you great ROI. We are choosing our spends wisely, and that allows us to deliver disproportionate results. So what we've declared in the past quarter is our spends on ADHO is more than 50% up, while the overall advertising has gone up by around close to 200 basis points. But the spends on the main brand is very, very significantly up.
All right. One of the ways you can also increase your growth is by increasing distribution and penetration. You've spoken about Project Aarohan. If you could give us a sense on the metrics that you are tracking out here and what could the additional scalability in your business be because of Project Aarohan and the Vishal acquisition itself. Banjaras, what kind of scale are you looking at here?
First part on Aarohan, what we're doing, Mangalam, is very simply we are adding to our quality and quantity of reach. We are focusing on direct reach addition, both in the urban and in the rural areas. We started with a few priority states and we are expanding it now to cover more than 80 to 90% of our business over a period of time. Urban results have already started flowing in. We expect to add roughly 8 to 10% of our direct reach every year for the next successive 3 to 4 years. As part of this exercise. Rural would be a similar task, but rural we have started a bit later, and I think it will take a couple of quarters for us to stabilize and then get back into the positive cycle on delta addition. When it comes to Banjaras, we acquired the company, which was give or take around 50 crores last year in terms of revenue. I think we can look at not a CAGR, but a multitude of X factor of growth of this brand. This brand operates only in certain markets. It does not operate into modern trade and e-commerce, does not operate into our core markets of the Hindi-speaking belt. And hence, there's a lot of scalability of this business. Our immediate effort is to really consolidate and assimilate the brand and really get the teams to work together. And as and when that happens, we will subsequently scale it up across channels and geographies.
But any further acquisitions that you would be looking at? And what would what would your kitty be right now in order to explore that?
So we have a sizable war chest. We are also a debt-free company, which allows us to really raise debt as and when needed. And hence that gives us a fairly good acquisition to kind and go ahead and acquire brands in the market. What's going to be a more constraint than money is finding brands which have a great fit to us. And hence, in the medium term, we'll be look out for more acquisition opportunities as and when they come to really bolster up our basic growth.
Would it be a similar size to what you've already acquired, around 120 odd crores?
This is being towards the smaller size. We are very happy to look at larger size acquisitions as well. But I think it's more about the quality and the fit rather than the size which will dictate our decision.
And do you have any target on how much should come in from ADHO and how much should come in from the others? This one quickly. And also, will you stay in this category or are you exploring other categories as well?
So, Mangi, our belief is that we can get ADHO to grow mid to high single digit revenue on a consistent medium term period. And, the other portion of the portfolio should grow a healthy double digit, to push up the overall numbers into double digit. And that is the core algorithm. And we would really look at acquisition being a top up.
Okay. All right. We're going to let you go on that note. Thanks very much for joining in and speaking with us. So that's Bajaj Consumer targeting double-digit revenue CAGR going forward and looking at possible acquisitions. Will be investing in their famous Almond Drops brand going forward, which they have 8% share in currently. We'll take a short break, but up next, we're going to be connecting with UBS's Chief India Economist, Tanvi Gupta Jain, and we also will be talking to Rohit Arora, Head of Asia Forex and Rate Strategy. Stay tuned for that. Welcome back. Still tuned into Halftime Report on CNBC-TV18. Well, it's turning out to be a session where we're higher by around 0.8% currently for the Nifty, so good going, and the Bank Nifty up around 0.4%. So overall, the barometers or the statistics look good for the markets in today's trading session. So let's talk a little bit about the macros. In fact, we have UBS's Chief India Economist Tanvi Gupta Jain, and we also have Rohit Arora, who's the head of Asia Forex and Rate Strategy, joining in from the UBS India Summit 2025. Tanvi as well as Rohit, thank you very much for taking the time out. Well, Tanvi, I'm going to start with you. The big question is that maybe we could now be, mending ways with the US when it comes to a tariff deal. There could be something on the cards which could be a little more conducive to both nations at this point in time. What is your sense in terms of where things stand when it comes to a possible trade deal?
Sure. Thank you for having me in the show. I would say that's the most discussed topic, even during our UBS India conference. When can India and US trade deal get negotiated and we see some respite from the announced 50% tariff? If you look at, we just launched our 2026-27 outlook, and our base case is that the reciprocal tariff in India, including penalty, which is right now at 50%, gradually comes down to 15% by end of December 2025. I would definitely think about the penalty getting withdrawn earlier by end of November, and gradually we also see some kind of negotiation on the reciprocal tariff. That is something that we are working on when we are looking at India's growth outlook, because that one uncertainty was one of the biggest, I would say, the hindrance for the investors to look at India right now.
Okay. So what are you targeting in terms of GDP growth, and what would that be predicated on based on what you're assuming when it comes to a tariff deal?
So let me talk about both about this year outlook as well as the FY27 outlook. For this year, we are at 6.8% GDP growth, and whatever data we have tracked for the first half of this year, that is April to September quarter, I would say the growth has been holding up very well because of resilient domestic demand and a very, very supportive policy. We have seen both fiscal as well as a monetary policy easing, and including a GST cut which got effective from 22nd of September, and that is kind of holding up India's momentum pretty well. So for the full year, we are at 6.8% GDP growth for FY26. Now going into FY27, we are expecting growth to stabilize around 6.4%. We are slightly below consensus. I think consensus is somewhere around 6.5% of GDP, 6.5% for next year. But we think the growth is going to stabilize around trend. We need to realize that FY26 GDP growth also had a tailwind of a low GDP deflator, which is now going to become unfavorable. But putting a little bit more thoughts on how the outlook is going to shape up in 2026. The first most important assumption is, which our global team is making, that the growth, especially on the global economy, which is going to see a soft patch in the next 4 to 5 months because of higher tariffs leading to slow export growth, will actually accelerate from the first quarter of next year. So we are actually expecting a very decent global GDP growth of 3.1% for 2026. So I would say from a global perspective, I think India remains supportive. Now coming back on the domestic factors, I think the biggest driver of growth that we are expecting in 2026 is going to be the household consumption. There has been a stimulus, I would say, or a policy support almost to the tune of $60 billion in FY26, which is going to sustain in FY27 as well. Okay. And on top of that, the rural consumption has been looking very good. Yeah.
Okay. So 6.4 is your base case. I'm assuming that's your base case for GDP in FY26?
FY27.
FY27. So what would your bullish scenario be, for example? Would it be 6.5%, which is in line with consensus, or better than that?
So there are two bullish scenarios that can play out for India. One, the global economy turns out to be better than what we are estimating. India is a low beta economy, but for every 100 basis points upswing in the global GDP, we could see a 60 basis point delta on India's growth. So that's one big upside. The second is the AI boom. I know we are talking about the AI boom in US and China, and it is inherently less labor intensive, but what we are expecting that in the initial phase, it will help lead to technology innovation, improvement in productivity, and can really boost India's growth back by around 20 to 30 basis points in FY27, depending upon the extent of AI implementation that we see in India. And a third upside that can come from is structural reforms, right? I mean, there's a long list of structural reforms that India needs to deliver on land, labor, capital. If we do continue to see more reforms bit on the part of the government, I think the growth can definitely go in between 6.5% and 7%.
Okay. Rohit, you know what I also want to know in terms of the move that we've seen coming in on the dollar index side, how does that place India in this whole story, and what is your outlook, especially coming in from the rupee front?
Yeah, sure. So see, there is a dollar and there is a rupee. The global dollar, we went through a small patch of this de-dollarization, dollar weakness narrative in Q2. And from second half of this year, that narrative has already started to taper because the global investor base has started to acknowledge that AI exceptionalism will start to make a comeback of the dollar against major currencies. So that narrative is very much visible in the markets. We have seen some upside pressure on dollar on that particular factor. But going from here until end of next year, I would say likelihood is dollar will be mildly stronger. We have DXY about a couple of percentage points higher from current levels. Euro dollar about 2% lower. And likewise, most EM currencies about 2 to 3% lower. The only catch is the point which Tanvi made. We are looking at next 12 to 15 months as a year of two halves, or if I could specify, a year of 1 quarter and 3 quarters. The next 3 to 4 months is where we think there's a soft patch coming in US economy, that is higher inflation, lower growth, which is a payback from tariffs. And that is where this possibility dollar first goes through a pullback before it rebounds on AI exceptionalism. So that is the dollar part of the story, which is mildly stronger dollar, but after a small decline in next couple of months. When it comes to rupee, rupee has, of course, been one of the worst performing currencies this year against the dollar. Going into 2026, if the domestic demand starts improving, there could be prospects for rupee to strengthen. But as things stand, we are working with an assumption that dollar rupee may hover around 88, 89 in the next 3 to 6 months and eventually move towards 90 by end of next year. That's partly because of dollar, but also because of the historical track record of rupee being actively managed in the direction of creating higher highs and higher lows.
My God, so 90 is your target on the rupee by the end of next year. But Rohit, just quickly wanted your target on the yield as well, which has been largely flat for the entire year if you look at it. But there has been strong amount of hardening which has taken place, say, from Q2 to Q3.
Yeah, sure. So it is indeed quite ironical that we have gone through a very aggressive monetary easing this year on top of the bond purchases that RBI did early in the year, and 10-year yields are basically unchanged from where it started the year. The factors that have been playing around here is, one is a very organic evolution of the yield curve, which is whenever the monetary policy is excessively tight, curves tend to flat, and as monetary policy starts to ease, the yield differential between long end and front end starts to widen. So that was a phenomenon which played out. But the bigger undercurrents in the bond markets have been the elongation of duration or elongation of longer maturity bonds issued by central government and state governments.
Sure.
That has been keeping an upside pressure on the very long end of the curve. And as things stand, we think even if RBI cuts the policy rate by another 25 basis points, which is our baseline, we think the next 20 to 30
Sure.
basis points by end of next year would be higher.
All right, Rohit, as well as Tanvi, always a pleasure hearing your views. Thank you very much for joining in and speaking with us. So that's the UBS macro team talking to CNBC TV18. But let's get back to numbers. Biocon is the next management on the show. Numbers were better than estimates. Growth was driven by generics and biosimilars. In fact, I did catch up with the MD and CEO of Biocon, Siddharth Mittal. Began by asking him about the quarter gone by and how they see the performance of the biosimilar segment. Listen in.
Continue to garner a very strong market share for biosimilar trastuzumab and pegfilgrastim in the US, with both these drugs contributing almost to 25% of or greater of the market share in the US. And I think it's been something which we were very confident of, something where we have really invested a lot of energy. And I see a similar trend coming in for other products as well. So today, if you look at a biosimilar ustekinumab, our product, Sensex, is the leading biosimilar player listed on all major formularies in the US. And I think as the market ramps up for the biosimilar companies, we definitely see a leading market share continue to build up over this year and, of course, continuing into the next year. And even in other markets in Europe, we continue to see a very robust market share in certain countries for our biosimilar adalimumab, biosimilar pegfilgrastim, and trastuzumab.
Okay. Well, just, now talking about the generics business, the generics business did well as well. It was around a 20% plus growth there. Just give us a sense in terms of how drugs such as liraglutide has performed for Biocon this quarter. What's the contribution been?
The liraglutide did contribute majorly to the 24% growth that we have seen this quarter, and primarily the launch was in Europe. We continue to launch in many markets in Europe. Recently, we received an approval from the German regulator, and we'll be soon launching that drug in Germany, which is the largest market for liraglutide in Europe. But thus far, we have seen a very strong traction across geographies. Our partner Zentiva is also seeing a very strong demand. And we have supplied the drug in Q2. We will continue to supply the drug in Q3. And there are many other markets where we are seeing opportunity opening up within this fiscal. But the growth of 24%, which I mentioned, has come, of course, Lira was a major contributor, but we have also had growth in other OSDs in the US, like products such as sacubitril valsartan, products such as dasatinib contributed to the growth. Apart from increased volumes that we have seen on our base business and also some uptick in demand in the API business. So a combination of all these growth levers led to a very strong 24% growth in Q2.
So when it comes to semaglutide, where are you placed? Which are the countries that you have, possibly given an application in? And would you be a first mover in countries such as Canada?
I mean, I definitely hope that we are amongst the early movers. We were not the first to file in Canada. But what we mentioned is we have commenced our filing in many emerging markets for generic Ozempic. So we have filed in Canada, we have filed in Brazil, and few other large emerging markets. And we'll continue this filing trend as we move into the second half. And of course, we think we have a very robust data which the regulators will be comfortable with. We are vertically integrated in terms of drug substance, drug product, and devices. And we are very confident that, in the coming fiscal, which is FY27, we should start receiving positive feedback and approvals from some of these regulators. But of course, let me remind you that some of the regulators, such as Health Canada, has not approved a single GLP-1 till now. So it's been challenging for the industry, and we think we are very well placed given our strong focus on scientific science and the whole vertical integration that I mentioned.
Okay. Insulins as a whole, how much of an opportunity do you see from the insulin market, considering that a lot of the concentration is now towards GLP from pharma majors?
I think there is a huge demand for insulin. Even if there is a strong growth for innovators on the GLP-1s, the demand for insulin is not going away. I think, especially in the emerging markets, We still see a lot of markets and patients who do not get the drug at the right cost. And I think we are very well placed. There's now a limited number of companies who manufacture insulin. We are one of the largest generic company in the world to manufacture insulin. And I think we definitely think there are strong headwinds. There are a lot of markets where we were not able to supply insulin in the past because of capacity constraints. And now we have expanded our capacities in Malaysia that will enable us to supply insulin in these markets. And I think we are also well placed post the acquisition of business from Viatris and our direct presence in many markets to capture on this opportunity.
Okay. The debt on the books, that stands at around $1 billion for Biocon Biologics.
Yeah, it's roughly $1.2 billion of debt, of which 800 million is the bond and remaining 350 to 400 million is the term loan plus some of the working capital loan.
Okay. What is the plan to reduce that $1.2 billion in terms of debt? Are you looking at options, say, for example, an IPO for Biocon Biologics, possibly a stake sale, PE funding?
I think what we had mentioned a couple of quarters back, that the board has constituted a special committee to look at various options. And one of the options which we had mentioned is a merger between Biocon and Biocon Biologics. And I think we right now focuses, of course, on strengthening the balance sheet by giving exit to all the structured equity or structured debt players. So we have already given an exit to Goldman Sachs and Kotak, and we announced that we have also entered into an agreement with Edelweiss to buy over the CCD and give an exit to Edelweiss very soon. So I think that portion of structured debt has been addressed. And I think as far as the bank debt on the bond is concerned, I think we still are very well placed. We have the debt repayment starting next year in a bullet form, and the bond, which is the large part of 1.2 billion, comes up for repayment in 2029. So I think as of now, the focus, of course, was on cleanup of the balance sheet, to look at corporate options, and then focus on generating cash flows to take care of the bank debt.
When can we hear something more tangible about the merger between the two companies?
Hopefully very soon. I think we are just at the fag end of this whole exercise, so we will let everyone
by the end
know.
of this calendar year, or by the end of say next or this fiscal?
We are hoping by end of this calendar year or before the calendar year.
Welcome back. Joining us now is Dilip Narayanan from Malabar Group. Dilip, thank you so much for joining in. First of all, your sense on the Indian demand, really, because this looks like, and not just for India, this looks like the first year on record that we're looking at investment demand stronger than jewelry demand.
Hi, Manisha. Thank you so much for inviting me to this forum. And once again, we've spoken about this a couple of times now during the last 2 months. And Indian demand, paradigm shift of at least 20 to 30% of investment demand coming in now is a big move, which I have seen, which we have seen, quite of late. The Diwali season, especially, saw a great move towards the investment demands, mainly the coins and the bars. Several factors are driving this: global economic volatility, I would say, geopolitical reasons, tensions, expectations. But apart from that, above that, I would say, is the people's trust towards gold is increasing as we see. The participation is increasing through various forums like ETF, the digital goals, and various forums are there through which people can avail these facilities. Interesting is that traditionally price-sensitive buyers who are now chasing quality and long-term value rather than just price dips. That shows a structural maturity in Indian demand, which I've been talking to various people. I can see a real, I repeat this again, the fact that, the belief on gold as safe haven is increasingly, adding this demand.
Dilip, how would you talk about the prices from here on? Do you have a forecast to put forth? Because we've seen prices gain up by 53% in this year till time, and the global banks do believe that this is even a gradual increase, but it was going to be an increase from here on too.
Well, if you ask me, my personal view on the same is that with what I speak to the global banks and the refiners and the mining companies, and also the few investors who deal with gold, and also with the market study, I feel that the gold, yes, is still on a bull run. Yes, we did see a part of dip coming in at certain levels. It went up to 3,800 levels, but then it's still moving. It's gone back to the bull run again. I think that this time, what I feel is that it will gradually increase, but but definitely if you ask me, with what I can read and what I can understand from the market, it looks gold will definitely go up in future.
Are you putting up a price there? Do you think 5,000 is achievable by next year?
I'm not very sure about that, Manisha, but as I mentioned, it's completely my personal view on this, because the markets, various markets speak on various prices. I was recently in LBMA in Kyoto in Japan, and met with a lot of foreign banks and suppliers and refiners. They had different views, different structures about the gold price. If you talk about 5,000, if you talk about 4,800 levels as an average for next year, and if you are also talking about 6,000 levels, so to get into one.
All right, those are big numbers. Even 4,800 for that matter is an all-time high when you look at the gold prices there. You mentioned you've been to LBMA recently, and that perhaps is the biggest confluence that we see in sense of gold, people meeting from miners to analysts to jewelry companies, etc. What is the kind of conversation that has been happening there? Prices you've already talked about, but when it comes to demand, will investment continue to be top of the rank there? Also the global central bank buying, because that clearly has been a big change in the last 2 or 3 years.
It was an absolute honor for to represent Malabar Gold and Diamonds Limited, and the Indian bullion industry at LBMA Annual Precious Metal Conference in Kyoto this time. LBMA platform brings normally together the global leaders across the value chain, refiners, bankers, central banks, traders. This year, I had the privilege of being a part of a panel which is called Asian Gold Demand Outlook, where my co-panelists were from China and from Japan, and moderated by the Metal Focus. We had various discussions. Well, India, I spoke about India, and where India continues to remain the heartbeat of global gold demand. And discussions were focused on how policy reforms in India are improving, like CPA digital transparencies, like IIBX, and gradual formalization of bullion ecosystem and things like that.
Okay.
It's very encouraging to see that India is being viewed, not just as a major consumer, but also as an emerging country in bullion, platform. So that was a great opportunity. Well, met with various bullion refiners, met with the overseas banks, the foreign banks, which participate as a suppliers. Yeah, and the reinforce the growing trust in India's journey.
In India, okay.
Had this trust towards India's journey in bullion ecosystem.
Absolutely. Thank you so much, Dilip, for joining in. So as said, that the gold prices seem bullish from here on. Global central bank is another thing, but policy reforms, especially India's space within global markets as a buyer, is something that we seem to be really looking strong.
All right, with that, we'll wrap up on this edition of Halftime Report. Thank you so much, Manisha, for taking us through that conversation. The market's doing well. Business Lunch takes all the market action forward.